Good evening and welcome to Bloomberg Quint Live. I am Agam Vakil and you're watching What You Miss. Let's get straight to the headlines. Indian markets edged lower, dragged down by banking heavyweights like State Bank of India, Axis Bank and ICICI Bank. And Manat Ispat's creditors may have approved the JSW AION Capital's bid for the company despite having to take a 70% cut on their outstanding amount. That's a Bloomberg Quint exclusive. And the Finance Ministry has asked banks to examine in all NPA accounts more than 50 crore for possible fraud. Maldives declines India's invitation for naval exercise involving 16 countries. Navy Chief Admiral confirms the development, adds that Maldives has not given any reason for the decision. Now, banks dragged the benchmark indices down in trade today. Both indices ended with cuts and about 0.3%. Neeraj Shah standing by to take us through all the action on the last trade. Neeraj, over to you.
Well, it was a bit of a tepid day of trade, if you will. Just look at what happened in the US markets overnight. But the rest of the Asian markets too came off a little bit. So you can almost argue that India performed in line with what the rest of the world was doing. The mid-caps and the small-caps probably cracked a bit more, but this was led predominantly by the banks. Mid-caps and the small-caps down, but look at banks. Both the Nifty Bank and the Nifty PSU Bank Index, both of these cracked and cracked meaningfully. 3.5 for the Nifty PSU Bank, about 1% lower for the Nifty Bank as well, and banks were the main culprits in the session today. So let's get all of those individual movers. Firstly, the newsmaker was Ambuja. The merger called off with ACC. A lot of people said that there won't be an impact, but I think a couple of synergistic impact moves will not work out for Ambuja, and therefore the stock cracking about 5%. Don't think it'll be too much of further downside, but for now down about 5%. Banks took a breather today. Axis Bank down 2.5%, ICICI Bank 1.5%. I think a couple of others like Kotak, etc. too came off. So it was a painful day for large private banks, but more painful for the PSU banks. Look at Union Bank, Bank of India, OBC, Canara Bank. That whole space was peppered with losses, led predominantly by what happened to PNB. The bank coming out and saying that there are some further losses that they'll have to take on an account, really leading to that stock getting clobbered in the session. A clutch of mid-caps saw some profit booking as well, the likes of Oberoi, Cholamandalam and some of the others. But that notwithstanding, it was a day that largely belonged to profit booking. Maybe, just maybe, the sell on rally template still very much alive.
Thanks for that, Neeraj. But staying off with the public sector space, Financial Services Secretary Rajiv Kumar has put out a tweet which suggests that PSB is directed to detect bank frauds and consequential willful default in time, refer to cases in CBI, and it will examine all NPA accounts with well over 50 crores as possible fraud. This may involve ED or DRI for a PMLA, FEMA, EXIM violations, if any. And for that, we are in conversation with Nikunj Johri, who joins us on the phone line. Nikunj, hi, thanks for joining us. What more details can you give us with respect to this particular tweet?
So public sector banks MDs have been directed to detect any bank frauds and consequential willful defaults on time and refer all these cases to investigating agencies like CBI. So now MDs have been asked to examine all NPA accounts exceeding rupees 50 crores for possible fraud and involve investigating agencies like CBI, ED, DRI for PMLA, FEMA, EXIM violations if found in any of these cases. Chief Vigilance Officers of public sector banks will vet all these complaints and coordinate with CBI for frauds exceeding rupees 50 crore. Remember earlier in the day, the Finance Ministry had given a 15-day deadline to all state-owned banks to identify gaps, technological and operational risks in the system and take preemptive action.
All right, Nikunj, just hold on. I think we also have Ira. Okay, fine. Well, in that case, Nikunj, if I can, add on another question here. What now? What are the processes that you think that could come into play with respect to this particular development?
So basically, banks will have to shift their focus from lending now to identify all these frauds that have been taking place, or shift their focus to NPAs exceeding 50 crores. So there'll be a lot of cases here that that the bank MDs will have to look after, and chief vigilance officers will have to vet all these complaints and refer these cases to CBI. So the banks focus would now shift from lending to identifying.
Okay, Nikunj, just hold on. I think we also have Ira joining us on this development. Ira, over to you.
Agam, I'm just going to welcome in Mr. H.R. Khan, former Deputy Governor of the Reserve Bank of India. Mr. Khan, thanks for taking our call. Ira here. Sir, what do you make of this directive, if I can call it that every NPA account more than 50 crore should be looked into for fraud and then referred to the CBI or ED or other investigative agencies?
I don't think, I have not gone through the details of those directives, but there is nothing. Most fraud cases beyond a cut-off point, on NPA cases, fraud angle and accountability angle is examined. And if they are found, they are referred to law enforcing agency. So I think it is only reiteration of existing instructions. There is nothing new about it. I don't think it is anything new.
But sir, every NPA account above 50 crore, you think, because 50 crore is not a very high amount in the current circumstances, you think banks would be already doing this?
All accounts, banks already see what is the staff accountability angle and whether is there any fraud angle. That is examined. That's examined, and there are, for frauds, there are laid down guidelines, red flags are raised, and there are RBI guidelines and banks' own internal guidelines for identification of fraud. And there is a system of reporting to Central Fraud Registry of RBI beyond 1 crore, and there is a committee of the board which looks after the fraud detection and the systemic implications. So all these things are there. The question whether they are implemented is an issue.
Okay. Sir, you know, I don't know if this is a correct interpretation, but there seem to be some knee-jerk reactions coming in. Like earlier in the morning, they said that we are giving all EDs 15 days to look at operational risk and find issues that may need to be fixed. We understand that there are issues need to be fixed, but would you caution against sort of rushing into lots of correctives at one stage?
Yeah. One has to give some time for things to settle down, and when there's a lot of will be again people will be doing ticking the check boxes rather than going deep and finding out the reasons for problems. There could be multiple reasons. The IT system is an issue. There are limited vendors. They are spread over all the banks. The HR quality of banks is an issue. So there could be multiple, and the whole idea of L1 concept in using the systems and vendors. So that's an issue. So there are multiple reasons why things don't happen the way they should happen. So one has to look at. And coming to this issue of referring every case to CBI and all that, I think one has to look at the capacity and limitations of CBI in terms of handling so many cases. And the best way is to, of course, we should get information about borrowers from CBIC. But the best way is to pick up some high-profile cases, take them to logical end in a time-bound manner, and give exemplary punishment to the fraudsters, so that the people draw lessons from that. And it will be unwise to spread the thin resources across so many cases and not reach any logical conclusion. So I think that may not be the right way. The best way is to pick up high-profile cases and fix time frame and take them to the logical end.
Absolutely, Mr. Khan. Thank you for joining us for that quick call. I know you need to go. Agam, I'm going to toss it back to you. Just summarizing what Mr. Khan was saying, he said that, look, there is already a fraud reporting framework in place. And that is true. The Reserve Bank of India, if I'm not wrong, about 12 to 18 months back had come out with this fraud reporting framework. And he said in that fraud reporting framework, every account beyond a certain amount has to anyway be looked through for fraud if it has turned an NPA, looked through for willful default, looked through for fraud. Now, as he said, the question is whether that was happening or not. And I'd like to add another question as to whether this is going to happen retrospectively. So will the banks need to go back and start to look through all the accounts which have been marked as NPA to see whether they are fraud or willful defaulter or not? So I think we'll have to wait for clarity on that only from the government side, or maybe eventually the IBA would be able to tell us something. But I think the second point he was making was an equally critical one, the capacity to actually handle a large number of cases, whether it's capacity at the investigative agency end or whether it's capacity at the banking end. You need to keep that in mind because surely having 1,000 hypothetically cases suddenly referred to investigative agencies may only clog up the systems and not do any good. Nobody is saying here that all these correctives don't need to take place. I'm just making that very clear. We're only saying that these correctives have to be sequenced and done over a period of time. So Agam, that would be the key takeaway from a couple of these announcements that have come in since the morning.
Fair enough, Ira. Thanks for joining us. Of course, there are plenty of factors out there which will need more clarity, and we will keep getting you updates with respect to this particular development. But moving on, amid the multi-agency probe into Punjab National Bank fraud, the state-run bank today said the amount of fraudulent transactions could be 1,300 crore rupees more than the current estimate of around 11,400 crores. The bank informed exchanges last night that the quantum of fraudulent transactions could be close to 12,700 crores. Remember, on 14th February, the bank had detected the fraud wherein billionaire jeweler Nirav Modi and associates had allegedly acquired fraudulent letters of undertaking from one of the branches of Punjab National Bank for overseas credit for other Indian lenders. And meanwhile, Nirav Modi's international jewelry business Firestar Diamond Inc. Corporation has filed for bankruptcy in the US, and the jeweler blamed liquidity and supply chain challenges for the move. Jeanette Rodriguez of Bloomberg News gets us all the details.
Well, overnight we've had two developments in the Punjab National Bank fraud case. The first is, of course, the bankruptcy of Firestar Diamond Inc. This is part of the empire of Nirav Modi, which is based in the US, and he's filed, in fact, for bankruptcy in a New York court. The second development that we have is Punjab National Bank has told the stock exchanges that the fraud is no longer $1.8 billion. It's actually about $2 billion. So it's larger than what was initially reported. Taken together, these two developments, of course, not good for the stock. Punjab National Bank, the stock itself is plunged. It's set for the lowest close since June 2016. Essentially, what investors are looking at is who's exposed to these creditors. Punjab National Firestar says that about 99 creditors, as many as 99 creditors could be impacted, and they have assets and as well as debt of about $100 million. We've asked the banks whether the same banks exposed to the other Nirav Modi companies are exposed to this. We don't yet have clarity. So there are unanswered questions yet, and we just have to wait and watch as to how much the bankruptcy of Firestar could impact the Punjab National Bank fraud.
Well, moving on, IRDAI may get new head next month. Sources told Bloomberg Quint that the search committee appointed to nominate the next insurance regulator will interview candidates on the 5th of March. And the top post is currently vacant after T.S. Vijayan retired on February 20th. Ridhima Saxena gets us all the details on who have been shortlisted for this job in this report.
Hunt for the new chairman for the Insurance Regulatory and Development Authority of India looks like it's finally coming to a close. We understand from two official sources close to the development that the shortlisted candidates will be called for the final interview on March 5 by the Financial Sector Regulatory Authority, which also takes care of all the financial sector appointments and is headed by the Cabinet Secretary P.K. Sinha. So these interviews will be scheduled on March 5, and we understand from the sources that the final recommendation is also likely to go in the same week. Up to March 10th, the recommendation will be sent to the Cabinet, and the Ministry of Finance will then take up to 2 weeks to finally decide who the new chairman of IRDAI would be. So we have got a list of 8 candidates who have been shortlisted for the interview. First one of them is Nilesh Sathe, who's the member Life of IRDAI. V.K. Sharma, who's chairman of Life Insurance Corporation of India, is second. The 3 managing directors of LIC, B. Venugopal, Sunita Sharma and Hemant Bhargava, are also contending for the chairman position. Along with them are the chairman and managing directors of New India Assurance and National Assurance. Apart from these, we've also got a confirmation from the former Chief Secretary of Karnataka, Subhash Chandra, who has also said that he has also been called for the March 5 interview.
Thanks for that, Ridhima. Of course, moving on, the JSW Group and AION Capital Partners combine is the only bidder in the case of Manat Ispat in one of the 12 largest stressed loan accounts referred for insolvency last year. And sources have told Bloomberg Quint that the Committee of Creditors have accepted the revival plan submitted by JSW AION, which proposes to pump in 3,700 crores in Manat Ispat. Payaswini Upadhyay gets us the details in this report.
The 37,700 crore rupees will be brought in by a consortium of JSW Steel and AION Capital Partners, and in the consortium, AION Capital Partners will be the lead partner with 69% shareholding. Here's how the bidders, intend to or have proposed to utilize the funds. Out of the 3,700 crores, the proposal is to pay 2,650 crores to the financial creditors. Remember, the admitted claim is a little over 10,000 crores. So the lenders or the financial creditors in this case are taking a 76% haircut. The remaining 1,055 crore rupees will be allocated towards capital expenditure, working capital and transaction related expenses. Interestingly, the operational creditors, their claims worth at least 443 crore rupees were admitted, but they are set to get nothing if the proposal, is approved in this current shape and form. Let's come to how these bidders are intending to source this 3,700 crore number. They are expected to take loans from banks to the tune of 2,500 crore rupees. There will be a working capital advance by JSW Steel to the tune of 125 crore rupees. There will be funds by bidders in the form of equity and quasi-equity, and the number to that is 875 crore rupees. And the bidders will also bring in additional debt and or equity at a later stage to the tune of 200 crore rupees. In the equity and quasi-equity, the number can be further broken down. Remember, we had the 875 crore rupee number. This includes 398 crore as equity, 277 crore via compulsorily convertible preference shares, and 200 crores will go to certain existing lenders that are currently holding optionally convertible preference shares. Here is how the shareholding will change if the resolution plan is approved by the Committee of Creditors in this current shape and form. JSW AION will hold 75% stake in the company. Lenders will hold 18%, and the incumbent promoter shareholding will be reduced to 3.16%. Currently, the promoter group holds 25% and financial institutions hold a 50% stake in the company. There's another plan that the JSW AION consortium has proposed, which is to transfer certain non-core assets of Manat Ispat into a new company and probably sell it at a later stage. Some of the potential assets that could be a part of this new company include the company's Raipur unit. There is a Hahadidi iron ore mine, in its investment in Orissa Sponge Iron Steel, its corporate office, coal washery at Patirdi and Angul, along with certain non-core investments. Two limestone mines in Chhattisgarh, which is the Gaitra and Goma Pasuri limestone mine, are proposed to be continued in Manat Ispat for the benefit of JSW and AION.
Right, moving on, assembly elections for Meghalaya and Nagaland are currently underway, and according to an ANI, a voter turnout of 56% has been recorded in Nagaland until 1 p.m, while Meghalaya saw 27.75% people who have exercised their right to vote. And a total of 370 candidates are in fray in Meghalaya, while Nagaland, 184 candidates from 9 parties and 11 independent candidates are in the fray. And there was a single stray incident of violence during the polls so far, and a blast was reported from a polling booth in non-district in Nagaland ahead of voting. Nagaland's chief electoral officer confirmed the incident and said that a handmade crude bomb was lobbed at the polling booth, injuring a person. However, polling is continuing without any hassle in the said booth. And the results of the polls in the 2 states will be declared on Saturday, along with the results of the election in Tripura, which went to polls on February 18th. And the United States President Donald Trump once again raked up a issue of high import duty on Harley-Davidson motorcycles by India, saying the US was getting nothing with New Delhi's recent announcement that it had slashed customs duty on imported motorcycles from high-end brands to 50%. Trump added that the US wants fair and reciprocal trade deals. Listen in.
So we want fair trade deals. We want reciprocal trade deals. Scott Walker has a wonderful company called HarleyDavidson in Wisconsin, right? Great. So when they send a motorcycle to India, as an example, they have to pay 100% tax, 100%. Now, the Prime Minister, who I think is a fantastic man, called me the other day. He said, we are lowering it to 50%. I said, okay, but so far we're getting nothing. So we get nothing, he gets 50, and they think we're doing, like they're doing us a favor. That's not a favor. And you know what I'm talking about. It's a great company. When I spoke with your chairman or the president of Harley, they weren't even asking for it because they've been ripped off with trade so long that they were surprised that I brought it up. I'm the one that's pushing it more than they are. But it's unfair. And India sells us a lot of motorbikes. So when they have a motorbike, a big number, by the way, they have a company that does a lot of business. So they have a motorcycle or a motorbike that comes into our country, the number is 0. We get 0. They get 100%. Brought down to 75, brought down now to 50. Okay. And I wasn't sure. He said it so beautifully. He's a beautiful man. And he said, I just want to inform you that we have reduced it to 75, but we have further reduced it to 50. And I said, what do I say? Am I supposed to be thrilled?
The European Union is all set to challenge the UK Prime Minister Theresa May tomorrow when it publishes its draft Brexit treaty. The treaty is said to have ignored some of May's most important demands. European Union is currently setting out the specifics of UK's exit plan from EU, and the 100-page draft agreement is likely to exclude key demands of the UK like border issues with Ireland and oppose UK's plan for transition of businesses post-Brexit. The clash comes at a critical week for May, who is facing stiff opposition from Labour leader Jeremy Corbyn, as well as holding on to a slim majority. And Corbyn detailed out his version of Brexit. Corbyn's version is looked upon more favourably by European Union, thereby adding pressure on Theresa May. But with that, it's a wrap on this show. There is lots more coming through the day, so thanks for watching and stay tuned in the Bloomberg Quint.